So the Buckhead office market. I kind of vacillated on whether to cover office, retail, wasn't really sure what to do. Again, just kind of hits the corridors of 400, Roswell Road, and then Central Buckhead obviously is where most of it's crammed in, and then down here around Piedmont Hospital, down Peachtree. So this is all the office space in Buckhead. It doesn't matter what size. I didn't delineate anything. So this is kind of just a supply and demand trend since 2009. Just shows you, I think this really just indicates what kind of product they're building. Obviously it's large because in 2009, 10, they were still delivering office space when it wasn't really feasible to build it anymore, but it was already started. So, they couldn't put the brakes on it, so they just went ahead and hoped for the best. And it also correlates with the jump in, obviously, vacancy rate and the downturn in rents, which correlates with the downturn in the market. So a bunch of supply came on when there was no demand for the supply. Obviously, the construction was still under construction in 2009, and then 2 years of nothing. And one of the, in arguably the most sought after market in Atlanta. That's pretty remarkable to me right there, those two pieces. I mean, I think that really shows the depth of what the downturn was like. So construction started again in 2012, and here's the delivery starting in 2013. It's nothing huge. We've got this one right here in 2014, 2015. I believe there's a 600,000 square foot, roughly, development going on right around here, right around the financial center is what I was reading, the Buckhead MARTA station. So I think that's what that piece is. So we've got the 1 in 5 year look. Again, we're sitting here, rents way up, vacancy rate almost 600 basis points below the 5-year average. And again, back to we got construction going on again. Prices are kind of inching up, volume's way up, and the cap rates are still compressing. I mean, everybody's been screaming for 3 years now about the Fed's about to raise rates. And so I think that just kind of goes again to show that most investors have already made those adjustments, in regards to the Fed and what they're going to do. So that's why we keep seeing cap rates compress when everybody keeps saying cap rates got to go up, cap rates got to go up, and they just don't. It just it continues to be competition for good product in a hot market. Again, this is just a graph showing the same thing we just looked at. Vacancy rates peaked over 20% in 2011, have just been steadily coming down. Obviously, absorption's been really solid. If you own an office in Buckhead in 9 months, you got 50% probability of leasing your space. That's pretty good. And then obviously the spike in asking rents, which is going to 100% correlate right behind that's going to be the start of new people coming in to build new product, because now all of a sudden rents are at a place where construction's feasible again. Segmented this out and just looked at the properties under 100,000 square feet too. Because quite honestly, I wasn't sure what crowd we'd have in here. I didn't know if we'd have a bunch of REIT investors, which I didn't figure we would. So I thought maybe this would be a little more in the ballpark of where most of us play. So you can see the difference obviously is in the rents. We're at 30 rents on the other one. That's Class A space. And this is probably going to be B and C space under 100,000 square feet. And this is an interesting one right here. The vacancy rate's at 4.2% on properties under 100,000 square feet. I mean, that's a function of demand, and it's a function of stuff getting torn down. That's a direct correlation of, the stuff that there's no land left basically in this town. So anything that anybody wants to build, something's coming down. 353 buildings on average. We're at 347 right now. Interesting that actually the average sales price has come down a little bit. I'm assuming that probably, I didn't dive into that much, but I'm assuming that probably is because it's the older product selling for redevelopment versus a stabilized product, Class C, that's selling for an investment purposes. So that's probably driving the sales price down just a bit. It probably, if I would have dove in, a land value probably would have been more appropriate there. And then cap rates. This is one of the very few where cap rates have jumped up again. And again, I believe that's just because it's the older product selling out for redevelopment. That would be my speculation. All right, and again, just the graph, same thing. Vacancy rates, 15%, coming down and flattened out, because I don't know if it can go much lower than 4%. I guess they could. Asking rents are definitely following the Class A stuff up. Obviously, as that spread goes, they're going to be more likely to raise their rents on the lower classes. Still pretty good probability of leasing space in the Class C. I think it's going to be interesting as the older product's torn down and they kind of price some people out of the market. Where do those guys go? I mean, is it going to be up 400? They're going to go up Roswell Road towards, Sandy Springs, into some of the markets where I think it's going to present some really good opportunities in some of the close markets that'll really benefit from the boom in Class A space all across the board in Buckhead. And this is just the forecast of over the next couple of years. There are a couple deliveries, and we'll talk about that in a minute. I got a section of proposed and underway projects, but the cap rate's just going to, the vacancy rate's just going to float down around below 6%. Obviously, those spikes are in direct correlation to the 2 new products that they're projecting. This is CoStar. Hi, this is Casey Lyon with Crossroads Appraisal Group, and I just wanted to say thank you for taking time out of your day to watch my video. If I can ever be of service or help you out with any information or appraisal-related questions, feel free to give me a call at 404-724-5110, or I can be reached through my website at crossroadsappraisalgroup.com. Thanks so much, and I look forward to hearing from you in the future.